And right now, we are 2 minutes away from the end of the trading day. Romaine Bostick alongside Bailey Lipschultz in today for Katie Greifeld as we take you through to that closing bell. It's a global simulcast. Carol Massar and Tim Stenovec join us. Welcome to our audiences across all of our Bloomberg platforms, television, radio, our partnership with YouTube on a very interesting day here in the market, Carol Massar, 24 hours removed from what were blockbuster results out of Nvidia, and well, just a few minutes removed from what is actually going to be one of its worst days in a while.
Yeah, pretty significant and definitely weighing on those major equity averages. Having said that, I keep kind of going to the S&P, which is down just shy of 40 points, and you really do have a lot of names, despite that overall average, more than 340 that are actually gaining ground today. We're going to get into some of them, but I actually had some good gainers to choose upon.
Oh, we're going to have to wait for
high
those.
Expectations.
I'm sure you'll have something to add. I count on it.
The big narrative is about, okay, what's happening with the AI trade. We'll actually get another check of that when we do hear from Dell after the bell today, and get an idea of what demand is going to look like. So we're expecting those numbers across, and that could help inform us a little more.
I'm also interested to see some of these software companies, your NetApps, Autodesk, Intuit, and a few others also reporting as well. And we're going to get round that out too with a couple of, consumer-facing companies, including one company that's been under pressure for a while, and that's Sweetgreen.
Yeah, we got a lot of companies that have been under market selling pressure, but the opportunity with earnings, Romaine, as you mentioned, to kind of right that ship. It'll be interesting to see what management teams say as these AI jitters hit at software companies.
All right, well, we'll get the closing bells in New York. We should point out the S&P actually basically opened flat on the day. It actually did very briefly dip into the green, but it's going to end the day. It looks like down roughly about 37 points as we wait for these numbers to settle. That's going to be a loss of about 0.5%. The NASDAQ composite going to lose about 270 points or 1.2%. The Dow Jones Industrial Average, we'll just call it unchanged on the day. And Carol, the Russell 2000 higher on the day by about 0.5%.
All right, as Romaine predicted, we do have some application software companies reporting Intuit out with its results. Second quarter adjusted EPS, that's a pretty big beat, $4.15 a share versus the street estimate of $3.69. Second quarter net revenue, top line, $4.65 billion. That too was a beat. Street was looking for $4.53 billion. Second quarter adjusted operating income, $1.55 billion. Again, better than what the street was forecasting, $1.4 billion. And we are getting something when it comes to the outlook. Intuit still sees fiscal year revenue at $21 billion to $21.19 billion. The street estimate is $21.25 billion. So it looks like it's reining it in a little bit, and still sees fiscal year adjusted EPS $22.98 a share to $23.18. The street estimate is $23.19. Stock down 1.5%.
I'm really curious to see what they say on the conference call, particularly when it comes to the rollout of these AI tools that everybody thinks is going to hit them. They kind of flick at that in the release, talking about that they are, quote, in a new category of the intersection of AI and human intelligence. I guess the big question is, does that actually benefit them in the long run?
Right.
I want to take a look at what's going on with Autodesk. Shares of the company makes PC software, multimedia tools, fourth quarter adjusted earnings per share beat estimates. Shares up 3.2%. First quarter revenue forecast did beat estimates as well. As far as those numbers look, first quarter adjusted earnings per share coming in $2.82 to $2.86 is what that outlook looks like. First quarter revenue, the outlook there, $1.89 billion to $1.9 billion. That beat estimates of $1.84 billion. Look backward, fourth quarter net revenue coming in above estimates at $1.96 billion. Shares in the after hours bouncing around, but unchanged as of now.
Yeah, this is a stock, Tim, that's still down about 21% so far this year. So again, earnings kind of giving investors something to chew on, but still not much follow through, at least as it relates to Autodesk, which is down, call it 2%.
All right, also keep an eye on NetApp. The share is up about 6% in the after hours trade. Data management software is the game. Adjusted EPS in its fiscal third quarter, $2.12 a share. The street was looking for $2.06. So a beat there, in line on the revenue side at around $1.17 billion. The company says that for the current quarter, its fiscal fourth quarter, it sees revenue in a range of $1.8 to $1.95 billion. The low end of that range is right on the nose of the average of Wall Street estimates. The shares right now basically unchanged on that news.
I want to go back to Intuit because now we're seeing the stock actually rally more than 2% here in the aftermarket. We know it's been getting hammered, not in a good way, down about 40%
Is
here.
there a good way to get hammered? Or explain, Carol.
All right. It's been a rough year in 2026. Stock's down about 40% so far this year. But let's go back, because Intuit, again to the outlook, seeing third quarter adjusted EPS, it's a little bit light in terms of what the street's expecting. They are looking for third quarter revenue up about 10%. You can see stock bouncing around. Now it's down again, down. Now it's unchanged. So I think investors just trying to figure out good, bad, or indifferent.
I'm looking at Duolingo. The headline here, and shares are down, but the company authorizes $400 million share buyback program. Shares down right now by 14.7%. The company, for its outlook, one reason why the stock is down, first quarter bookings, $301.5 million. The estimate was for $332.1 million. So a miss there. The company sees first quarter revenue coming in at $288.5 million. That's shy of the $1.8 million that investors wanted to see. This stock has been under pressure. CFO change just a few months ago. Shares down by about 18% as we speak. Once again, 2026 bookings, $1.27 billion to $1.3 billion. The estimate was for $1.4 billion. We got the CEO coming on the program tomorrow. We're going to ask him about all this and more. Luis von Ahn.
What language is it going to be in?
He speaks a lot of languages, but we're going to do it in English because that's our limitation here.
It's going to be accountant language, financial language.
Well, going from languages to online marketplaces, I don't really know an easy way to pivot there, but RealReal right now up 5.7%. This came after forecasts for revenue beat expectations, sees 1Q revenue $185 to $189 million. The low end of that easily passing estimates for $182.2 million. Looking at first quarter EBITDA, adjusted EBITDA forecast, $11 to $13 million. Estimates were for $8.7 million, so a beat as it relates to RealReal looking forward. But again, another company that's been under pressure, down also more than 20% so far this year.
Computer and server maker Dell now crossing the wire with its quarterly report. The shares popping initially on the back of it. The main headline, the redhead on the terminal, is your fiscal 2027 forecast. Revenue in a range of $138 to $142 billion. The low end of that range is more than $10 billion above the average of street estimates. The street was looking for 126 and change. So a very bullish guidance here on the revenue side. When we go back just a little bit and take a look at the adjusted EPS in the quarter that just passed, the company also beat there, $3.89 a share. The street on average is looking for $3.52. It looks like revenue also beat in the most recent quarter. The company also, guys, says it's going to raise its annual dividend by 20%, boost its buyback program by $10 billion. A lot to unpack here in this release.
Yeah, some more in terms of the commentary and context from the company. Recorded AI orders of $34.1 billion in the fourth quarter, $64.1 billion for the full year fiscal 2026 in particular, surpassing 4,000 AI customers in fiscal year 26 with growth across neocloud, sovereign, and enterprise customers. And again, as you said, raising that annual dividend and that board approving that $10 billion increase in the share buyback. And the fiscal year 2027, company sees adjusted EPS of $12.90 a share at the midpoint. That's up 25%, Tim, year over year.
And just looking through the commentary in the release to get some more context, the company's vice chair and COO, Jeff Clark, says the AI opportunity is transforming our company. We closed more than $64 billion in AI-optimized server orders, shipped more than $25 billion throughout the year, and are entering fiscal year 27 with record backlog of $43 billion. Powerful proof that our engineering leadership and differentiated AI solutions are winning. Shares up by about 6% right now.
Yeah, and you talk about that revenue growth figure. Remember, just a few years ago, this was a company that was in contraction and certainly got a big boost from AI. I do want to turn real quickly to Block, ticker XYZ. A lot of drama surrounding that company. The company says it's going to cut 40% of its workforce and says that for the first quarter that we're in right now, it sees adjusted operating income in a range of $600 million, which is actually above what the street was looking for. The company did actually report earnings for the quarter that just passed, the fourth quarter, saying that gross profit did come in above estimates at $1.83 billion, and its segment revenue relatively in line with estimates at about $2.19 billion. But the key headline there is a 40% cut of its
Hold
workforce.
on, Romaine. When have you ever seen an announcement 40% cut to headcount?
I'm a little surprised by this. I'm actually looking through the release right now. I don't know if this has something to do with some of the drama that we've been reporting on about the future of this company, whether this is about productivity and AI. Jack Dorsey, of course, has not been very vocal about exactly what's been going on there. But we talk about a company that we know has been trying to go through some sort of restructuring. We have to find out the exact reasons why. But, I mean, you look at the investor reaction there, Tim. I don't know if you have a TV screen in front of you, but a 15% pop in the shares on that.
Well, when you're paying, when your workforce declines by more than 40%, your salaries are going to be going down. So I think that's probably one of the reasons why we're seeing that reaction right now. But yeah, we're going to have to dig into this more because that is a big head cut.
Yep.
Headcount cut announcement.
Big headcount cut.
Is that AI at work?
I don't know.
That's what the Bloomberg story says. Jack Dorsey's block slashes nearly half of workforce in an AI bet, but also want to talk sticking on AI. The information reporting a few minutes ago that Meta has scrapped their most advanced AI training chip. Stock's not really reacting, but says that according to the information, Meta now is shifting their focus to less complicated versions. So they're kind of leaning into competing with Nvidia, maybe a little bit more complex than expected.
All right, and the AI parade continues. CoreWeave out with its latest results. The stock is lower in the aftermarket. CoreWeave fourth quarter revenue, $1.57 billion. That's a little bit better than the street estimate of $1.55 billion, but we're going to dig a little bit deeper into that one. 5.5% lower in the aftermarket.